Hello, everyone. I am going to be very, very bullish on Apple heading into next week. For open and closes outside of the lower level of the Bollinger Band, with very, very rarely do we see this, we could see that we closed outside below the 30 RSI on Apple as well on a daily chart. This is generally very, very bullish. The most bullish case is if on Apple we end up opening red by some God-given miracle. If we open red on Apple Monday, 100%, I'm getting into 2-week out calls at the money. This, I am very, very convinced that we are going to get a bit of a bounce. The play is going to end up being decent. So overall, Apple is a $1 trillion company. When a $1 trillion company trades outside of the lower Bollinger Bands, which denotes a overextension below a standard deviation, that tends to get a lot of institutional buyers into that stock, especially Apple. If you see a penny stock, for example, trading outside of the lower Bollinger Bands for X amount of time, it can remain there. But with a $1 trillion company like Apple, it does not sustain itself. 4 opens and closes in a row is really, really very, very rare. So statistically, based off of the RSI being below 30, and based off of the amount of opens and closes outside of the lower Bollinger Bands, statistically, we have a very, very ridiculously high chance of bouncing. So that is my thought process. This week, I believe, is a really good spot to get long on Apple. For at least 2 weeks out, we should be good. So that's what I want to share with you guys. Based off of Apple being bullish like this, it's a good chance that the market could also get some sort of a bounce and some sort of strength as well. Because if Apple starts doing well, I believe the rest of the stocks should also get a bit of a bounce as well, especially the NASDAQ. And if the NASDAQ gets a bounce, the SPY may also get a bounce. So we'll see how that plays out. But overall, we're going to have to take a look at everything one piece at a time. So we're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, and the other large tech stocks. All right, so without further ado, let's get started with the video. All right, so let's simply start off with the dollar. So we see that we know that the dollar has an inverse relationship to the market. If the dollar rises, then that's generally bearish for the overall market. We can see that we have a very indecisive candle here on the dollar. Doesn't look great. Not an immediate reason to be bullish or bearish. But generally what you want to see is a retest of these highs here before you want to go short. This does not look that bullish or bearish. It's pretty tough to choose a direction here. But what I will say is, in terms of day trading, when you see a big drop to the downside and the first instance of a bullish move, right? Because this is the first instance of a bullish move, you generally do not want to lean short. You would rather wait for pullbacks. The highest probability trade would be to lean long. So that is my thought process on the dollar. If we do end up getting a bit of a drop, right, it would be to be long. And if we end up bouncing dramatically on the dollar, then in conjunction, that is bearish for the overall stock market. Okay, so there's that for the dollar. The VIX is also showing a bit of interestingness. It's trading above 13. It's hovering around 1350. If we can remain up, basically, the VIX also has an inverse relationship to the market. If the VIX is comfortably trading above 1350 and $14, then that is very, very bearish for the market. If the VIX is trading below 1350 or 13, then that is that's bullish for the market, okay? Because it has an inverse relationship. As the VIX falls, then the market ends up being more strong, okay? So this does not look like a very good bullish setup, really, right? But once again, we are at the lows here. it's tough to just lean short the VIX. That's very, very aggressive. It makes more sense to wait for levels of support to go long on volatility. And that's basically the thought process on that as well. And then when we take a look at the shorter term yields, the 10-year yield also has an inverse relationship to the market. So if the 10-year yields are showing strength, then that is bearish for the overall market. And we can clearly see the 10-year yield is starting to cross above these levels of resistance and showing a lot of strength now. So this is another reason why we're starting to see weakness in the overall market. As we see this weakness in the overall market, as we see the strength in the yields, we're seeing weakness in the market. All right, so far, let's recap. The dollar is not giving a great signal. The VIX looks bearish, which is bullish for the stock market. And the yields look bullish, which is bearish for the stock market. So basically, we're not getting any clear-cut signal from any of these three instruments. It's very, very difficult to ascertain which direction the market is going to go based off of these three things that we just saw. Okay? So the next best thing that we could do is we could take a look at the large tech stocks. All right, so we saw Apple already, right? What we need to do is also look at what the leaders are doing. The leaders were the chip stocks. So Nvidia, it's clearly showing some strength. So we can see that Nvidia has a very, very strong bounce. It still didn't close above 493. But just on like an immediate look at what's going on with the stock is it looks bullish. We closed above the 618% fib from this high, right? If we were to take it from this high, this low, we closed above the 618% fib, right? And we are retesting the 786% fib. Okay, so closing above the 618% fib is generally bullish. So Nvidia clearly bullish. All right. Now let's take a look at AMD. AMD doesn't look as bullish. It's clearly having trouble at the 382% fib. And this is something that we're going to see with the rest of these tech stocks. And the SPY, the NASDAQ, all of these stocks, essentially, this is what I really feel like is going on in the market at the moment. So if you guys remember that scene in Spider-Man, right? So Spider-Man, in one of the original movies with Tobey Maguire, there was a subway train going full speed. So Spider-Man had to try to stop that momentum, and he shot a bunch of webs, and he stood in front, like he put his body in front of the train and tried to pull as hard as he could to stop the train. And that train essentially is the downward momentum. And it's really, really tough to be bullish when it's really tough to think that the train will stop when there isn't enough force to stop it. Does that make sense? So, this is what the theme is basically for the rest of these stocks, the SPY and the NASDAQ. So the AMD doesn't look that great. Microsoft also doesn't look that great. See that it's showing some weakness here. Google also doesn't look that great, but it's a good sign that Google broke a new low. So Google was trying to hold above this 137 level, right? The 137.75 level. But it ended up breaking a new low. And essentially, we could think about is there were a lot of people trying to go long with this as a stop loss. The fact that we made a new low is actually more bullish in the long term because we broke a new low, and now, like down here is a much better. All of this is a much better place to go long instead of trying to aggressively go long alongside that huge downward momentum. So this is a follow through of that downward momentum. So this is actually bullish, the fact that Google did this. Let's take a look at Amazon. This is a clear-cut description of what I was talking about. Amazon, huge downward momentum. I did say that Amazon looked pretty good for a bounce, and it did end up bouncing. but it doesn't look like it can continue to. It's really, really difficult here. So overall, right, the issue now is that Apple, I'm very, very bullish on Apple. So they are going to force people to go long at a very, they're going to force people to try to stand in front of a locomotive to play the opposite direction. So not only are they going to stop the locomotive, the train, from going forward, they're going to be able, essentially, longs and bulls are going to try to make the locomotive move backward. So that's the difficulty here at the moment. So with that being said, the best that we can do is to go long at these levels of support and have a stop loss right below. Have a stop loss right below the level of support, like a tight stop loss. So that is currently what they're forcing us to do. So we saw Amazon, Microsoft. Take a look at Meta. Meta is also similar to Nvidia, so I'm going to show some strength. Tesla also doesn't look great, but it's similar to Google in that it made a new low. So this, in hindsight, this in the long run is more bullish. Had we just bounced a bit, it would give more room for a fall lower. But the fact that we broke the low is, if we can start getting some buyers, it's actually more bullish. Similar to what I was just talking about on Google as well. And then last but not least, we take a look at Netflix. Again, you know, they're showing weakness at the 38.2% fibs, and the market basically has to make a decision. If Apple starts to show some strength, it's going to help pull the rest of these tech stocks up, in my opinion. And then when we take a look at the SPY looks very, very similar to Amazon, looks very similar to Google. It's basically a lot of bearish momentum, and they're forcing you to try to go long. The clear-cut direction, obviously, bearish, right? But because Apple has this short-term buying pressure, I'm going to lean more long on Apple than I am. I'm not going to rely on the SPY or like the NASDAQ or these other tech stocks. I'm not relying on any of these others. I am more so focused clearly on Apple being bullish, because statistically, we've seen it happen. So we're going to see how that plays out. But same concept. The SPY has been making new lows and multiple lows, multiple instances where they made people stop out. And then basically, as they make retail more and more fatigued and tired to be bullish, and once they make retail bearish, right, that's the perfect opportunity for them to rip it up. So we're going to see how that plays out. But definitely, this looks very similar to Tesla. Looks similar to, it also looks a bit similar to Google. So we're going to see how that plays out. And then we can take a look at the NASDAQ. Same concept. Right at a level of support. Made a new low. Similar to the SPY, everything else that we were talking about. So we're going to have to see if these levels can hold and bounce heading into early next week. And then the IWM also, same concept. So it's going to be pretty interesting. I am personally looking to lean long on Apple. And I'm excited. I'm pretty excited. I'm going to be posting more swing trades as well. So far, this year has been really, really good for everyone in the group. And it's going to be even better heading into these next few weeks. January is going to be spectacular. In February, March, April, May, June, July, August, September, October, November, December, all going to be amazing. So one step at a time. So far, what we're seeing here is, statistically speaking, very rare that Apple is this bearish without getting a bit of a bounce. And yeah, we're going to play that, and we're going to see how that goes. All right, so I'll keep you guys updated in the Discord. And just understand that if we get a gap down on Apple, I am going to be leaning long. If we get a gap down on Monday on Apple, automatically I'm going long. Probably a month out. 10% stop loss. And should be good to go. All right, so I hope you guys enjoyed today's video. Happy Sunday. Hope you guys have a spectacular rest of your weekend. And yeah, just pray that we end up gapping lower on Apple. That would be the best case scenario. We do have room to fall lower, right? On Apple, we have room to go to, I would say 175, 174. But we're not going to be married to any position. We're going to stick to our stop loss, and we're going to re-enter. So if we enter long here, for example, at 180, right? 10% stop loss if it breaks lower, but I'm still bullish, I'm going to re-enter with a shorter dated contract, be more aggressive. Does that make sense? So yeah, it should be fun. If you guys enjoyed the video, please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you. Have a good one.